And Marcus, we're starting with a market-related note, a Chinese newcomer to the New York Stock Exchange. This is Beijing's answer to Twitter, right?
Pretty much, indeed. We're talking about the Chinese social network Weibo. It's listed its shares on the Nasdaq in New York. Weibo introduced its shares at a price of $17 a piece, which was lower than many had expected. Still, the initial public offering values Weibo at $3.5 billion. And since its opening, Weibo shares, they've been doing very well. They're currently up more than 25% on the first trading day. Now, Weibo is the seventh Chinese company to list in the United States this year, and there's more to come. Delano D'Souza brings us more now on a firm that's relatively unknown in the West, but a household name in China.
It translates as microblog, and with Twitter's ban in China, Weibo has filled its void. The site boasts an average of 61 million users a day. In March alone, the company said it had over 143 million users versus an average of 241 million for Twitter. The company, soaring popularity with China's population with over 600 million online, has also hit some speed bumps. Growing social media regulation by Chinese authorities since September have forced users to switch to alternatives like WeChat, where posts can remain private. The company's revenues tripled to over 188 million versus 664 million for Twitter in 2013. Weibo's listing is seen as laying the groundwork for another Chinese tech IPO. Alibaba, the world's largest online retailer, looks set to list in the United States. The company boasts of 500 million users on its Taobao marketplace and is partly owned by Yahoo. It's expected to be the largest the tech industry has seen since Facebook went public in 2012. A record number of Chinese technology companies are expected to list in the United States this year.
Now, Russia, Ukraine, the EU and the United States have agreed on a deal to de-escalate the Ukrainian crisis. It remains to be seen, though, what's going to happen with Ukrainian gas supplies on the back of that deal. Russia's President Vladimir Putin has set a one-month deadline for Ukraine to start paying its gas bill. Putin was speaking during a question-and-answer session on Russian television. He said Gazprom would demand upfront payments from Ukraine in May unless there's progress. The Russian state-owned energy giant says Ukraine owes it $2.2 billion for previous gas supplies.
We will wait a month. If in a month, in the next month, there won't be any payments, then in accordance with the contract, it will change to a prepayment system. What does that mean? Ukraine will have to pay us a month in advance, and we serve as much gas as they pay us for.
Our investors are watching the Ukraine crisis closely, and in the United States, stock markets and shares, they've been trading higher in the wake of the agreement to de-escalate the Ukraine crisis. Shares, they haven't been rallying ahead, though, so the market reaction has been tepid, shall we call it that, to this agreement. The focus is on earnings season, with Google and IBM coming out with the disappointing profits after the bell on Wednesday. At the same time, we've seen better than expected results this Thursday from PepsiCo and also the banking sector. We're going to take a look at earnings season, a closer look at earnings season in just a moment. First, though, let's talk you through the European close. The Ukraine crisis put pressure on stocks earlier in Europe, but shares, they ended higher as the US opened up higher. In terms of corporate earnings in Europe, Germany's SAP posted lower than expected quarterly profits, with the firm blaming a strong euro. Let's take a closer look then at some earnings that we're watching for you. Profits at the American bank Goldman Sachs slipped to under $2 billion in the first quarter. That's 11% less than during the January to March period in 2013, as the bank's bond trading slumped. Still, earnings were better than many analysts had expected, as revenues from investment banking rose. Goldman's rival Morgan Stanley also reported better than expected quarterly results, earning $1.4 billion between January and March. Like Goldman Sachs, General Electric beat expectations when it reported a fall in quarterly profits. The American company earned $3 billion from January to March in comparison to $3.5 billion last year. Present worldwide, GE makes everything from aircraft engines to fridges, and it's widely seen as a bellwether. It says its European operations reported better than expected results in the first quarter. And drink makers are feeling the pinch during a crackdown on corruption and lavish gift-giving in China. France's Rémy Cointreau says profits this year could fall as much as 40% as its cognac sales in China are slumping. Rémy's rival, Diageo, also saw its sales tumble in the Asia-Pacific region in the first quarter. The maker of Johnnie Walker whiskey and Smirnoff vodka reported a 19% fall in sales there. OK, that is the business news for now. Back to you, Laura.
Marcus, thank you very much indeed. We've got all the best bits from the internet over the past 24 hours now. Yes, it's web news.